Welcome to another Whiteboard Wednesday. My name is Rafael Gallo. I'm a senior manager here with Global Professional Services, and I'm here to talk to you about recoveries in MRI and necessarily how they work. We have two different ways that we can calculate it and kind of what those feature sets are. So diving right in, MRI gives you two options for how you can calculate your recoveries. We've got your standard calculation, which for all intents and purposes we'll call office right now, and we've got the retail calculation. So there are two distinct calculations. You'll see that they get to the same spot, just different ways to think about how you get your expenses. The starting point for both ends up being your total pool. So if we look at the office set, your total pool is a starting point. You take that and you're going to multiply that times your pro rata share. Your pro rata share ends up being your suite square footage divided by your building square footage. Right? So that gives you the tenant's pro rata share. You multiply that and that ends up equaling what your tenant's recoverable share is. Now there's a lot of stuff that goes into that, and we'll dive a little bit into what that is. When you look at retail, and one of the reasons why people do this is you're calculating it more of a cost per square foot basis. So how do you get to that? Well, you start off with your total pool, just like the office calculation, and you take that and you end up dividing that by your building square footage. Okay? So once you do that, you end up getting to a cost per square foot number. You take that cost per square foot, you multiply that times the square footage of the suite, and you end up getting to the tenant share. These two end up being the same number, all things being equal, with the total pool, the square footages. And that's just kind of the difference between your standard office calculation and your retail. As far as the feature sets for both of these, so we're going to have the features. In your office calculation or standard, you're going to have the ability to do gross up calculations. So if you want to present a building as 100% occupied, 95% occupied, you can do the gross up calculation. We have the ability to do caps. Those will be both cumulative and non. And you have the ability to do your admin fees. And finally, the last thing you'll be able to do is your base year amount. Your base year amount is where you're taking your current year expenses less your base year expenses to equal what your total recoverable expenses are going to be. Then when you look at retail, you're not going to have this gross up calculation. What you end up getting to is what we'll call leasable area calcs. Sometimes this might be referred to as GOLA or GLOA, really just your greater of leasable area, or any sort of different type of calculation for the square footage. We have the same thing with the caps, both cumulative and non. And the one thing you'll see over here that's a major differentiator between the office calculation is the fact that you have your contributions. Contributions are ways to reduce or increase, depending on whether it's the major tenant or the inline tenant, what the recoverable share is by modifying what the total pool is as well as the unit square feet. So that's a little about recoveries. Thanks for enjoying another Whiteboard Wednesday. Have a good one.